Recent weeks on the markets were characterized by record highs both for risky assets like equities, but also for secure havens like gold. Now we have seen some correction in the gold price recently. That might be that some of the investors took their profits, but overall we see still an environment where corporate profits, particularly in the US, are booming and economic data are sound, also mainly driven by positive surprises in the US. Now this environment is better than feared a couple of months ago when we all were looking forward for the negative implications from tariffs. These have not been passed through to the consumer so far. It might still happen, and that might have a negative impact on markets down the road. Now, the other drivers for the optimism on markets is overall the kind of better relationship between the US and China that have continued talks about trade agreements again. So that's another boom or fueling factor for the markets. Now, taking all of this together, we see that economic growth in the US is better than expected before, and also China is performing with a higher pace 2025. We have revised up our forecast for the US to close to 2% and expect growth in the Chinese economy by 5%. Europe, we keep our forecast of a bit around 1%, and Germany just above the zero line for this year. And there are more doubts about the expected recovery in 2026. Europe is becoming more entrenched in this situation between the pressure from low-cost imports from China, and at the same time is facing some shortages of rare earth coming from that destination as well. And the same thing is true with regards to the relationship to the US. There we see that deregulation is taking place, particularly in the banking sector, whereas Europe only thinks about simplification and is struggling to get this done. So the playing field between the US and Europe is becoming even more uneven. And that makes it hard to go ahead with strong growth and strong profits for companies. In that respect, we have not revised up our forecast for Europe for next year, and we are more having doubts about the figures we have put in our forecast so far. Now, looking forwards to markets, there might be another rally coming up till the end of the year because good data keep flowing in. But we're getting more concerned about the continuation of this boom because the AI investment might slow down a bit and underperform the expected performance in the next couple of quarters. So disappointment is likely to come through on this side, and there might be more negative effects from tariffs coming through in the US. And on top of this, we have already the second longest shutdown in the US economy, and a continuation of this might harm the economy as well. And there are doubts about the rule of law in the US, and that might undermine the investment activity in the United States. So overall, we think that we are only heading for a market consolidation, but we would not rule out there might be a bigger correction, probably at the beginning of 26 rather than in the remainder of 25.